Your 2021 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during that time, please press the 1 and then the number 4 on your telephone keypad. The call will be recorded. Thank you very much. Ms. Deborah Crawford, Facebook Vice President of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta's fourth quarter and full year 2021 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, Sheryl Sandberg, COO, and Dave Wehner, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we may present both GAAP and non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
Hi, everyone, and thanks for joining today. This was a solid quarter for our products and business. It was also an important one for our company. In October, we announced that Meta would be our new name, and we laid out our vision for the metaverse. And when we shared our plans to connect, I said that this is not something that we're going to do on our own. The metaverse will be built by creators and developers, it will be interoperable, and will touch many different parts of the economy. In the months since, it's been exciting to see lots of other companies share their own plans for the metaverse and how their experiences and products might show up too. And I look forward to partnering with a lot of them as we work to bring this to life together. Now, last year was about putting a stake in the ground for where we're heading, and this year is going to be about executing. And today I'm going to discuss our 7 major investment priorities for 2022. And they're Reels, community messaging, commerce, ads, privacy, AI, and of course the metaverse. And these are the areas that we're putting a lot more talent and budget towards. But before I get to that, I want to briefly touch on our Q4 results, which I know Sheryl and Dave are going to go deeper on. I'm proud of the work that our teams did here. We shipped products, our community continued to grow, and businesses of all sizes turned to us to help them reach people. But there are 2 things that I want to call out that are having an impact on our business. The first is competition. People have a lot of choices for how they want to spend their time, and apps like TikTok are growing very quickly. And this is why our focus on Reels is so important over the long term, as is our work to make sure that our apps are the best services out there for young adults, which I spoke about on our last call. The second area, and related to this, is that we are in the middle of a transition on our own services towards short-form video like Reels. So as more activity shifts towards this medium, we are replacing some time in newsfeed and other higher monetizing services. So as a result of both competition and the shift to short-form video, as well as our focus on serving young adults over optimizing overall engagement, we're going to continue to see some pressure on impression growth in the near term. Now I'm confident that leaning harder into these trends is the right short-term trade-off to make in order to get long-term gains. But we've made these types of transitions before with mobile feed and stories, where we took on headwinds in the near term to align with important trends over the long term. And while video has historically been slower to monetize, we believe that over time, short-form video is going to monetize more like feed or stories than like watch. So I'm optimistic that we'll get to where we need to be with Reels too. Ultimately, our continued success relies on building new products that people find valuable and enjoy using. And in a competitive marketplace, we are focused on understanding the areas that we deliver on for people and executing against this strategy. Dave is going to share more on the impact to our business in a minute, but before we get to that, I want to discuss our investment priorities for 2022. The first one is Reels. Now, it's clear that short-form video will be an increasing part of how people consume content moving forward. And Reels is now our fastest growing content format by far. It's already the biggest contributor to engagement growth on Instagram, and it is growing very quickly on Facebook too. And as we continue to improve the tools for creators, ranking for the people watching, and as we roll out the product everywhere across the world, we expect that this will continue growing quickly. So looking ahead, we're investing in simplifying video across Instagram, building more great creative and monetization tools for creators, and helping more people discover and interact with relevant Reels. The next investment priority is community messaging, which is about chatting with groups of people that you have something in common with, whether that's a shared community, an interest, or experience. You know, we already run some of the world's most popular messaging platforms where people connect one-on-one or in groups with friends, family, and colleagues. And we're seeing people increasingly want to share more things in messages that they were previously maybe posted to feed. So I think the popularity that we're seeing with apps like Slack in the workplace or Discord or Telegram reflects this trend too. So we're going to help people on WhatsApp better organize their group chats and make it easier to find information for the communities that they're a part of, like parent groups or neighborhoods. And we're also building community chats on Facebook and Messenger for real-time conversations within those groups and communities. And I also want to call out business messaging, since it's an area where there's some real momentum here. We estimate that there are more than 1 billion users are connecting with a business account across our messaging services every week. And we're partnering with companies like Uber and Geomart to help people book a ride or have their groceries delivered right from a chat. And we're building new tools to make buying online better for people and easier to manage for businesses. And we believe that this can be an important business for us in the years to come. We're also making good progress on our broader commerce efforts. We already help a lot of businesses reach new and existing customers with personalized ads, and our commerce tools are an extension of that. It's a seamless way for people and businesses to buy and sell through our apps. And our strategy here, since introducing Shops a year and a half ago, has been to make it as easy as possible for people to make a purchase after discovering a new brand or product without having to switch over to a browser or re-enter their payment info. And Cheryl will share more about our progress here, including some of the success we saw over the holidays. Now, next up is ads. And with Apple's iOS changes and new regulation in Europe, there is a clear trend where less data is available to deliver personalized ads. But people still want to see relevant ads, and businesses still want to reach the right customers. So we're rebuilding a lot of our ads infrastructure so we can continue to grow and deliver high-quality personalized ads. Now, the next two priorities I want to discuss focus on infrastructure that underpins all of our products. The first one is privacy. And we've made huge investments in strengthening our approach to privacy, including rebuilding our privacy program and our privacy review process. And we made updates to bring greater privacy to our products, including end-to-end encrypted backups and disappearing messages on WhatsApp, and end-to-end encrypted voice and video calling on Messenger. And over the next few years, we're focused on building out a major privacy infrastructure project that will encode our privacy commitments at a deeper level of our technical foundation to make them more durable and make product development faster in this evolving environment. Now, on to AI. This is one of the areas where we've routinely seen stronger returns on our investments over time than we've expected. Advances in AI enable a lot of the experience that I've talked about so far. It enables us to deliver better ads to people while using less data. It's core to all of our safety and security work. It has meaningfully improved the relevance of Reels and overall content ranking in general, and it plays a big role in our commerce efforts. Artificial intelligence is also going to play a big role in our work to help build the metaverse. We just announced our AI research supercluster, which we think will be the world's fastest supercomputer once it is complete later this year. And this is going to enable new AI models that can learn from trillions of examples and understand hundreds of languages, which will be key for the kinds of experiences that we're building. Now, looking ahead, we're focused on further scaling our computing power and transforming our AI infrastructure through advances in foundational research, as well as improvements to data center design, networking, storage, and software. Now, the last investment priority here is the metaverse. We are focused on the foundational hardware and software that are required to build an immersive, embodied internet that enables better digital social experiences than anything that exists today. On the hardware front, we're seeing real traction with Quest 2. People have spent more than $1 billion on Quest Store content, helping virtual reality developers grow and sustain their businesses. We had a strong holiday season, and Oculus reached the top of the App Store for the first time on Christmas Day in the US. We're working towards a release of a high-end virtual reality headset later this year, and we continue to make progress developing Project Nazare, which is our first fully augmented reality glasses. Now, as for software, Horizon is core to our metaverse vision, and this is our social VR world-building experience that we recently opened to people in the US and Canada. And we've seen a number of talented creators build worlds, like a recording studio where producers collaborate, or a relaxing space to meditate. And this year, we plan to launch a version of Horizon on mobile too. So that'll bring early metaverse experiences to more surfaces beyond VR. So while the deepest and most immersive experiences are going to be in virtual reality, you're also going to be able to access these worlds from your Facebook or Instagram apps as well, and probably more over time. So this will enable us to build even richer social experiences where you can connect with friends in the metaverse, whether they're in VR or not. We're also focused on avatars, which will be how you represent yourself in Horizon and across other developers' experiences in the metaverse. In December, we rolled out our Metaverse Avatars SDK to all Unity developers on Quest and Rift and Windows-based VR platforms, letting developers bring meta avatars to their own VR experiences. We just announced an update that lets you further customize your avatar to better express yourself. And we're introducing digital clothing too, starting with an NFL partnership so you can cheer on your favorite team. You can use your avatar across Quest, Facebook, Instagram, and Messenger. So it serves as another bridge between our 2D social apps and 3D immersive virtual reality experiences. And we have a bunch of work ahead to make the avatars as expressive and high fidelity as they need to be to fully represent us and help us feel present with one another. But I am very excited for the advances that we're making here. Now, making meaningful progress across all 7 of these areas is going to improve the services that we offer today, and it will help power a more social, intuitive, and entertaining metaverse where people, businesses, and creators can all thrive. And this fully realized vision is still a ways off. And although the direction is clear, our path ahead is not yet perfectly defined. But I am pleased with the momentum and the progress that we've made so far, and I am confident that these are the right areas and investments for us to focus on going forward. 2022 is the first page of the next chapter for our company. I'm grateful for all the talented teams at Meta and our partners for executing on this important work, and of course for all of you who are on this journey with us. And now, here's Cheryl.
Thanks, Mark, and hi, everyone. Our total ad revenue in Q4 was $32.6 billion, which is up 20% year over year. The close of the year also marked the first time our business generated more than $100 billion in annual revenue. I want to congratulate our teams and thank our partners for helping us reach this milestone. Throughout 2021, we saw solid growth, which continued in Q4. But there were a number of dynamic factors that created headwinds for us this past quarter, in addition to those Mark described around competition and our shift to short-form video. We were lapping a period of strong demand in 2020 that benefited from very strong growth in online commerce, which has since slowed. Q4 was also the first holiday season after Apple's iOS changes, which have had an impact on businesses of all sizes, especially small businesses who rely on digital advertising to grow. This will continue to be a factor in 2022. We've also heard from advertisers about other macro trends that contributed to the headwinds in Q4, including global supply chain disruptions, labor shortages, and inflationary pressures. A number of industry reports have pointed to people shopping earlier in the holiday season to avoid potential supply chain issues and shipping delays. This is in line with the behavior we saw from advertisers, many of whom front-loaded their spend earlier than usual. Mark talked about 7 areas of investment. I'd like to talk about our progress in 3 of those: ads, commerce, and messaging. First, ads. Like others in our industry, we faced headwinds as a result of Apple's iOS changes. As we described last quarter, Apple created 2 challenges for advertisers. One is that the accuracy of our ads targeting decreased, which increased the cost of driving outcomes. The other is that measuring those outcomes became more difficult. These challenges are complex and interrelated. We're working to try and improve things, for example, by making progress in closing the underreporting gap for iOS web conversions and by introducing tools like our aggregated events measurement solution to deliver better insights for advertisers. These efforts will help to mitigate some of the challenges, but we expect the overall targeting and measurement headwinds to moderately increase from Apple's changes and from regulatory changes in Q1 and throughout 2022. On the shift to short-form video, I want to emphasize that while we're going through a transition, we're optimistic. Right now, Reels monetizes at a lower rate than Feed and Stories, but we expect this to improve over time. We've made successful transitions before, the shift from web to mobile, and then another shift from Feed to Stories. We have a playbook here. The experience we have for monetizing stories is directly applicable, so we're not starting from scratch. We think that over the long term, this shift will be a success for us and our partners too. Second, commerce. We launched a number of new tools in Q4. We released new features like ratings, reviews, and community replies to product questions, and significantly improved checkout stability. We brought shops to groups, and we started testing live shopping for creators, an early glimpse of the immersive shopping experiences that will be possible in the metaverse. Our commerce strategy remains focused on 3 areas: continuing to be the best place for advertisers to find customers and get strong ROI, making it easier to sell on our platform, and improving the customer experience. We still have a lot of work to do compared to other mobile and web shopping experiences, but we're seeing promising early signs. It's great to see businesses and consumers using social and immersive shopping experiences like product tags, drops, and live shopping. A good example is The Laundress, a premium fabric care and home cleaning brand from Unilever that wanted to build awareness of a new line it developed with the musician John Mayer. In November, they launched exclusively on Instagram for 24 hours and hosted a live shopping event, a conversation between John Mayer and Laundress co-founder Lindsay Julia Boyd, where people could buy the new products as they talked about them live. The hour-long event generated more than $40,000 in sales. Overall, we're pleased with the engagement we saw with our commerce tools over the holiday season and view Q4 as a promising milestone in our multi-year journey. Third, business messaging. Our focus is on helping businesses and consumers connect. Our largest monetization effort is click-to-messaging ads, where you click on an ad in your Facebook or Instagram feed, and it opens a chat with a business in Messenger, Instagram Direct, or WhatsApp. It's a great way for businesses to drive engagement. And we've seen lots of demand from consumers who want to use our messaging apps for everyday services like utilities, financial services, education, and travel. In Q4, we expanded the types of information people can choose to receive from businesses and the format in which they can interact. We're continuing to invest in new tools to make it easier for people to help and make purchases right from a chat. More than 150 million users globally now view a business catalog on WhatsApp each month. And new features like collections on WhatsApp help businesses organize their products and make it straightforward for people to find things to buy. As we enter 2022, our focus is where it has always been, building products that help people connect and businesses grow. We're making long-term investments to evolve our business and continue to drive real value for our partners. In the coming year, we'll continue to invest in things that improve ad performance for our clients, in short-form video like Reels, and in making the commerce experience better for consumers and marketers on our platforms. As ever, I'm grateful to our partners around the world, big and small, who we learn from every day, and to our teams at Meta who work so hard to help businesses through the holiday season and beyond. Now here's Dave.
Thanks, Cheryl, and good afternoon, everyone. As we announced in October, beginning this quarter, we were reporting revenue and operating income in two segments, Family of Apps and Reality Labs. I will begin by discussing our consolidated results before moving to segments and ending with our outlook. All comparisons are on a year-over-year basis unless otherwise noted. We delivered solid results in the fourth quarter, ending a strong year for our business as full year 2021 total revenue grew 37% to nearly $118 billion. Q4 total revenue was $33.7 billion, up 20% or 21% on a constant currency basis. Unlike the first three quarters of 2021, we experienced a currency headwind in Q4, and had foreign exchange rates remained constant with Q4 of last year, total revenue would have been about $307 million higher. Q4 total expenses were $21.1 billion, up 38% compared to last year. In terms of the specific line items, cost of revenue increased 22%, driven primarily by Reality Labs hardware costs, core infrastructure investments, and payments to partners. R&D increased 35%, driven primarily by hiring to support Family of Apps and Reality Labs, as well as increased Reality Labs R&D operating costs. Marketing and sales increased 34%, mainly driven by marketing spend and hiring. Lastly, G&A increased 107%, driven primarily by legal-related costs and employee-related costs. We added over 3,700 net new hires in Q4, the majority in technical functions. We ended the quarter with over 71,900 full-time employees, up 23% compared to last year. Fourth quarter operating income was $12.6 billion, representing a 37% operating margin. Our tax rate was 19%. Net income was $10.3 billion, or $3.67 per share. Capital expenditures, including principal payments on finance leases, were $5.5 billion, driven by investments in data centers, servers, network infrastructure, and office facilities. Free cash flow was $12.6 billion. We repurchased $19.2 billion of our Class A common stock in the fourth quarter, and we ended the quarter with $48 billion in cash and marketable securities. Moving now to our segment results. I'll begin with the Family of Apps segment. Q4 total Family of Apps revenue was $32.8 billion, up 20%. Q4 Family of Apps ad revenue was $32.6 billion, up 20% or 21% on a constant currency basis. On a user geography basis, year-over-year ad revenue growth was strongest in Asia Pacific at 31%. Rest of world, Europe, and North America grew 28%, 20%, and 15% respectively. Currency was a modest headwind in all international regions. In Q4, the total number of ad impressions served across our services increased 13%, and the average price per ad increased 6%. Impression growth was primarily driven by Asia Pacific and rest of the world, while impressions in North America declined 6% year over year. On a global basis, impression growth benefited from ad load increases in user growth. This was partially offset by engagement-related headwinds as we faced increased competition for people's time and a shift of engagement within our app's video services like Reels, which show fewer ads than Feed or Stories today. Pricing growth was broad-based across regions. Worldwide pricing growth slowed from the third quarter as we lapped stronger growth in the year-ago period and faced currency headwinds. Pricing was also negatively impacted by advertisers facing challenges from macroeconomic factors and measurement and targeting headwinds. Family of Apps other revenue was $155 million, down 8% due to a decline in payment revenue earned from games. Family of Apps expenses were $16.9 billion, up 35% due to higher legal-related costs, employee-related expenses, marketing infrastructure-related costs, and payments to partners. Family of Apps operating income was $15.9 billion, representing a 48% operating margin. We estimate that approximately 2.8 billion people used at least one of our Family of Apps on a daily basis in December, and that approximately 3.6 billion people used at least one on a monthly basis. Facebook daily active users were 1.93 billion, up 5%, or 84 million compared to last year. DAUs represented approximately 66% of the 2.91 billion monthly active users in December. MAUs grew by 115 million, or 4% compared to last year. Facebook user growth was impacted by a few headwinds in the fourth quarter. In Asia Pacific and rest of the world, we believe COVID resurgences during prior periods pulled forward user growth. User growth in India was also limited by an increase in data package pricing. In addition to these factors, we believe competitive services are negatively impacting growth, particularly with younger audiences. Within our Reality Labs segment, Q4 revenue was $877 million, up 22%, driven by strong Quest 2 sales during the holiday season. Reality Labs expenses were $4.2 billion, up 48%, driven by employee-related costs, R&D operating expenses, and cost of goods sold. Reality Labs operating loss was $3.3 billion in the fourth quarter. For the full year 2021, Reality Labs operating loss was $10.2 billion. Turning now to the outlook. We expect first quarter 2022 total revenue to be in the range of $27 to $29 billion, which represents 3% to 11% year-over-year growth. We expect our year-over-year growth in the first quarter to be impacted by headwinds to both impression and price growth. On the impression side, we expect continued headwinds from both increased competition for people's time and a shift of engagement within our apps towards video services like Reels, which monetize at lower rates than feeds and stories. On the pricing side, we expect growth to be negatively impacted by a few factors. First, we will lap a period in which Apple's iOS changes were not in effect, and we anticipate modestly increasing ad targeting and measurement headwinds from platform and regulatory changes. Second, we will lap a period of strong demand in the prior year, and we're hearing from advertisers that macroeconomic challenges like cost inflation and supply chain disruptions are impacting advertiser budgets. Finally, based on current exchange rates, we expect foreign currency to be a headwind to year-over-year growth. In addition, as noted on previous calls, we also continue to monitor developments regarding the viability of transatlantic data transfers and their potential impact on our European operations. Turning now to the expense outlook. We expect 2022 total expenses to be in the range of $90 to $95 billion, updated from our prior outlook of $91 to $97 billion. Our anticipated expense growth is driven by investments in technical and product talent and infrastructure-related costs. We expect 2022 capital expenditures, including principal payments on finance leases, to be in the range of $29 to $34 billion, unchanged from our prior estimate. Our planned capital expenditures are primarily driven by investments in data centers, servers, network infrastructure, and office facilities. As we discussed previously, this range reflects a significant increase in our AI and machine learning investments, which will support a number of areas across our family of apps. While our Reality Labs products and services may require more infrastructure capacity in the future, they do not require substantial capacity today, and as a result are not a significant driver of 2022 capital expenditures. On to tax. Absent any changes to U.S. tax laws, we expect our full year 2022 tax rate to be similar to the full year 2021 rate. Separately today, we announced that our Class A common stock will begin trading on NASDAQ under the ticker symbol META in the first half of 2022. The new ticker symbol aligns with our rebranding from Facebook to Meta. In closing, 2021 was a strong year for our business and an important year for the company as we aligned our corporate identity with our long-term ambition to build the next generation of online social experiences. We're investing aggressively in 2022 to support our product roadmap as we work to deliver new and engaging experiences for people and support the businesses and creators who rely on our services. With that, France, let's open up the call for questions.
We will now open the lines for a question and answer session. To ask a question, press 1 followed by the number 4 on your touchtone phone. Please pick up your handset before answering your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And our first question is from the line of Brian Nowak with Morgan Stanley. Please go ahead.
Thanks for taking my questions. I have two. The first one on the Reels transition. Y'all talked about how you've been through other transitions in the past with mobile and stories, et cetera, and you successfully navigated through. Is there anything that's unique or more challenging about the Reels transition that makes you think it could take potentially longer to sort of scale those ad products for this format as opposed to other formats in the past? And the second one, Dave, when you sort of talk about the headwinds around ad targeting and measurement becoming larger in the first quarter and in 2022, is there anything other than sort of year-on-year data comps there, or are you expecting other changes from a signal perspective, and maybe help us understand any further changes you expect to come on the signal loss perspective? Thanks.
Yeah, thanks, Brad. I could probably take both of those. Yeah, so on Reels, I mean, I think there's a lot of the characteristic of Reels that makes it, quite similar to the transitions that we've gone through before. As in the past, when we were focused on stories, we're really focused on consumer experience and really making short form video work effectively on both Instagram and Facebook. And we're already seeing that be the biggest driver of growth on Instagram, and it's growing very quickly on Facebook. So we're really encouraged by what we're seeing, but we're really focused on making the consumer experience right. And over time, we do think it's a format that will work effectively for advertising, and we think the experience that we have for stories will really lend itself well in the Reels format. So, we're confident in our ability to monetize over time, but right now there's, relatively few ads in Reels today. So it's definitely something that from an impression growth and monetization perspective is gonna be a headwind. On iOS 14, we saw the revenue impact with iOS just in general in Q4, and that was in line with our expectations and similar to the Q3 headwind. But obviously, as we go into 2022, we're going to be lapping a period in which in Q1 and Q2 those headwinds were not in place in the year ago period. So that definitely makes for a tough comp in the first half of the year. And we believe the impact of iOS overall as a headwind on our business in 2022 is on the order of $10 billion. So it's a pretty significant headwind for our business. And we're seeing that impact in a number of verticals. E-commerce was an area where we saw a meaningful slowdown in growth in Q4, and similarly we've seen other areas like gaming be challenged. But on e-commerce, it's quite notable that Google called out seeing strength in that very same vertical. And so given that we know that e-commerce was one of the most impacted verticals from iOS restrictions, it makes sense that those restrictions are probably part of the explanation for the difference between what they were seeing and what we were seeing. And if you look at it, we believe those restrictions from Apple are designed in a way that carves out browsers from the tracking prompts Apple requires for apps. And so, what that means is that search ads, could have access to far more third-party data for measurement and optimization purposes than app-based ad platforms like ours. So, when it comes to using data, you can think of it as, that it's not really apples to apples for us. And as a result, we believe Google's search ad business could have benefited relative to services like ours that face a different set of restrictions from Apple. And given that Apple continues to take billions of dollars a year from Google search ads, the incentive clearly exists for this policy discrepancy to continue.
Our next question is from Eric Sheridan with Goldman Sachs. Please go ahead.
Thanks so much. Maybe two questions if I can. First, following up on Brian's questions about Reels, I think when we've gone through these transitions before, you've talked a little bit about what you're seeing from an engagement standpoint about Reels and how levels of engagement compared to other forms of engagement from a consumer perspective on the property, and what the differential might be in terms of, while it's early innings, in terms of differential of ad pricing and how you think to close that gap. Is there any willingness you're able to give us on both engagement levels or pricing differential so we can think through what the transition scope might need to be? And then Cheryl, on the last call, if I remember correctly, you talked about elements of, as we move into Q1 in the first half, some of the workaround efforts that the team were trying to implement would start to show some efficacy. Can you give us an update on where you stand internally on workarounds and broader advertiser community acceptance of some of the workarounds on targeting and measurement as we move into the first half? Thank you.
Sure, I can start with your first question on some of what we're seeing on engagement. Reels and short form video overall are very engaging. And, a lot of what we're seeing is that there is, people are spending a lot more time and I think I mentioned this in my script up front that it's growing very quickly. This is already the biggest contributor to engagement growth on Instagram. I think it's one of the biggest contributors that we're seeing to positive engagement on Facebook too already. But I think going back to the last question, when there was a question about are there any factors here that what are the similarities and differences to what we've seen in the past? The big similarity is that this is certainly not the first time that we've gone through a major format evolution. And what these transitions have all had in common, from desktop feed to mobile feed to stories, and now to Reels, is in the beginning our ad system and business are not as tuned for the new format. So as the engagement of the new thing starts to replace some of the engagement of the old thing, it creates a near-term headwind for revenue, but it's not, that part at this point now is not that big of a concern for us. I mean, it makes some of the stuff not as clean in the near term, but over the long term, we're pretty optimistic about that. The dynamic that I think is actually a little bit different with Reels than what we've seen with stories and mobile feed in the past is with Reels, I would say that the teams are executing quite well and the product is growing very, very quickly. The thing that is somewhat unique here is that TikTok is so big as a competitor already and also continues to grow at quite a fast rate off of a very large base. And so that to the question that was asked before around is there anything that's going to make it so that it takes us longer to kind of get to where we want on this? It is that even though we're compounding extremely quickly, we also have a competitor that is compounding at a pretty quick rate too. But overall, back to the question, Reels is extremely engaging. I think overall engagement will grow as a part of this, and that's why we're optimistic about the future. But there's a lot of work to do here.
And then Cheryl, were you going to take the second part of the question on the mitigation front?
Yeah. So when we talked about mitigation, we've said there are two key challenges from the iOS changes: targeting and measuring performance. On targeting, it's very much a multi-year development journey to rebuild our ads optimization systems to drive performance while we're using less data. And as part of this effort, we're investing in automation to enable advertisers to leverage machine learning to find the right audience with less effort and reduce reliance on targeting. That's going to be a longer-term effort. On measurement, there were two key areas within measurement which were impacted as a result of Apple's iOS changes. And I talked about this on the call last quarter, as you referenced. The first is the underreporting gap. And what's happening here is that advertisers worry they're not getting the ROI they're actually getting. On this part, we've made real progress on that underreporting gap since last quarter, and we believe we'll continue to make more progress in the years ahead. I do want to caution that it's easier to address this with large campaigns and harder with small campaigns, which means that part will take longer, and it also means that Apple's changes continue to hurt small businesses more. The second area underneath the measurement challenge is really data delays. As part of the iOS changes, we and many other ad platforms, we receive less granular conversion data on a delayed basis. And what advertisers shared with us, that this makes real-time decision-making especially difficult. And that's particularly important during the holiday period, where people are often spending a lot and really monitoring their ads and adjusting spend, not even on a daily basis, but often on an hourly basis. And that was one of the challenges we faced during this holiday quarter. Our next question is from Justin Post with Bank of America. Please go ahead.
Great, thank you. A couple. Mark, just on a big picture basis, you're adding a lot of short form video and maybe the content shifting from content from your friends to general content. What does that mean for Facebook? I'm sure you've thought about a lot of it, but how do you think about the evolution of Facebook as a platform? And then for Dave, as you think about the measurement and targeting challenges, when we get out to September and October, should we be effectively lapping the issues, or is there reason to think it could actually get worse in the second half? Just thinking about revenue growth kind of reaccelerating. Thank you.
I can take the first one. So for Facebook, I think, content from your friends is always going to be an important part of the experience. And so will be discussing stuff that you find with friends, whether it's in a group or community or public content or reels or news or different content like that. But I think overall you're right that the balance of content that people see in feed is shifting a little bit more towards stuff that isn't coming from their friends, which you may discuss with your friends, but is kind of shifting towards more public content. I think at the same time we're seeing this trend where, if you think about your day-to-day behavior on a lot of this stuff, this pattern may resonate with you. But a lot of people now are taking a lot of the content that they may have previously shared in a feed and sending it to friends over chats. Whether it's one-on-one or through group chats. And this is one of the reasons why I called out community messaging as one of the major priorities for us. Because if you look at the overall constellation of services, a lot of the kind of personal sharing is sort of shifting towards messaging. And a lot of what we're seeing in feeds is basically this content consumption and a lot of just really highly engaging content that forms the basis for conversations, whether it's in chat or in comment threads in those feed apps. But that type of creative work is a lot more of what we're seeing across the feed apps, whether that's Facebook or Instagram.
Hey, Justin, it's Dave. On the second part of your question, it's really about sort of what's the landscape of headwinds look like as it relates to targeting and measurement. And there, I think what we're seeing is kind of two things going on. We've got incremental headwinds coming from things like iOS 15, which provides some additional sort of targeting and measurement headwinds, but those are far less significant than the changes made with iOS 14.5, which really started to have an impact more seriously on the business in the second half of last year. So I think the lapping effects can be very pronounced in the first half of the year, where we're lapping periods that didn't have that impact. So that's where we're going to see the biggest impact from the lapping. But we're continuing to face more headwinds as it relates to like iOS 15 and also further regulatory headwinds that restrict the use of data for targeting purposes in regions like Europe. So we're continuing to see headwinds. I think we're working to mitigate those. But the biggest lapping effect will be in the first half of the year, where we didn't have the big iOS 14 headwinds in the same period last year.
Our next question is from Doug Anmuth with JP Morgan. Please go ahead.
Thanks for taking the questions. Mark, you talked last quarter, I think, about how Reels would become better integrated into both Facebook and Instagram. Can you just talk about where you are in that process? Clearly, we've seen some. Just curious if there's more in the product pipeline, and could that deeper integration potentially have even greater drag on revenue going forward? And then, Dave, just curious if you're willing to comment on a Reality Lab spend or loss number in 22.
I can talk about the first piece. I think we're probably a little further along than just the beginning, but I'd say we're closer to the beginning than the end of the trend on Reels. There's a big flywheel here where more creators share more content, and because we have a mix of content in the feeds, from all different types, we're only going to show Reels or recommend them if we feel like there's high quality content to show. So as there's more high quality content, we show more of it. There certainly will be a lot more. We think it's growing. It is going to grow a lot going forward. We believe in engagement on both of those platforms. So yeah, I think that we probably will see as we're forecasting, and I think Dave is talking about here, the relative monetization rate of Reels for the next, for whatever the foreseeable future is, will be lower than feed as we kind of displace some of that with this. But over time, we think that there's a potential for a tremendous amount of overall engagement growth, and we think that in a steady state over time, we think that Reels should monetize closer to feed or stories than other, longer form video. So I think we're optimistic about it. And I think we think it's definitely the right thing to lean into this and to push as hard to grow Reels as quickly as possible and not hold on the brakes at all, even though it may create some nearer term, just slower growth than we would have wanted. That's the picture that I see. I don't know if you want to add anything to that.
No, I think that's exactly right, and that's what's kind of factored into the guidance we're providing specifically for Q1. And then, Doug, on the expense outlook, we're not breaking out expenses by segment, but I probably can give some color here. We're expecting accelerating headcount growth in 2022 to be the biggest contributor of expense growth, and that's largely in tech and product roles to support the 7 product priorities that Mark laid out: Reels, community messaging, commerce, ads, privacy, AI, and the metaverse. And a number of those investment priorities map to our family of apps segment, and we expect family of apps to continue to drive the majority of expense growth in 2022. Though we do expect Reality Labs operating loss to increase meaningfully in 2022, and that's incorporated into our outlook.
Our next question is from the line of Mark Mahaney with Evercore ISI. Please go ahead.
Mark?
Mr. Mahaney, your line is open, sir.
One more time. Okay, got it. All right, I want to ask 2 questions, please. First, on ESG, could you just, there's been a series of steps that have been taken, reducing the ability to do political targeting, the introduction of the take a break feature within Instagram, and maybe a few other things that, arguably have been put out there to kind of address some of the ESG concerns. Where do you think you are in terms of addressing some of those that we've heard in the investment community? And then, Dave, I think you mentioned this $10 billion headwind, and I think that was related to some of these policy changes, Apple policy changes. Could you just give a little color as to how you came up with that number? Thanks a lot.
Yeah, Mark, on the headwind, we're just estimating what we think is the overall impact of the cumulative iOS changes to where 2022 revenue forecast is. So if you kind of aggregate the changes that we're seeing across iOS, that's sort of the order of magnitude. We can't be precise on this; it's an estimate. We've got ranges on the impact to our business, but we think it's a substantial headwind to work our way through, and obviously we're working hard to mitigate those impacts and continue to make ads relevant and effective for users. I don't have anything specific on the ESG front, so probably can't comment on that. Can follow up with you offline on that.
Our next question is from Youssef Squali with Truist Securities. Please go ahead.
Great, thank you. I have 2 questions as well. Mark, you stated your goal of refocusing on growth of younger audiences on the last earnings call, and I think you even signaled back then that it could mean maybe less focus on other constituency. I know you may be early, but any color maybe to share on growth on users and engagement by maybe age groups, and then probably another question for you. I'm curious about when you think we can start seeing the kind of the meshing of apps like Instagram with AR and VR and the interoperability of these apps. Is that something where you think we're going to see gradually evolve, or something that gets kind of opened only once the metaverse is sufficiently built up, whenever that is? Thanks.
Let me take the first one. I can take the first one on user growth. I think what we said about overall kind of user growth is we're certainly seeing an impact from strong competition, particularly with younger audiences. So that's true, and we're kind of seeing that globally. If you look at kind of the overall user growth landscape for the fourth quarter, we're seeing MAU and DAU in US and Canada sort of bounce around as sort of expected and indicated given our high level of penetration. And then if you look at the rest of world, we've seen some headwinds there, kind of that are a little bit unique in the quarter in areas like India, where we saw data plan pricing increase lead to slower growth there. So that's another kind of some unique elements of the quarter on that front.
Sure, and in terms of when are some aspects of the metaverse showing up, I mean, I talked about avatars in my my remarks at the beginning, and how we're making it so you can have increasingly both expressive and eventually we've shown some demos around photorealistic avatars of yourself that can show up in all the different apps. That your avatar can show up across Facebook and Instagram and Messenger as well as Quest, and we'll expand that further. And I think I also commented before about our goal for 2022 to make it so that Horizon works not just in immersive VR, but on 2D screens as well. So you could potentially jump into those kind of worlds from Facebook or Instagram or different apps as well. So I think you're seeing some of that stuff is already there. Some of it will come over the course of this year. Of course, the ability to message across apps is something that we've been working on for a while. You can already do that across Messenger and Instagram, and there's more there that will roll out over time as well. So I think you are going to see this stuff work seamlessly across the family.
Our next question is from John Blackledge with Cowen. Please go ahead.
Great, thanks. Two questions. Maybe first one for Mark. How is Reels differentiated versus TikTok, YouTube Shorts, and other short form video services? And one for Cheryl. Any further color on how SMBs are changing ad spend budgets since the iOS changes, and is it slowing adoption of new SMB advertisers on Facebook? Thank you.
Sure. So I can start with Reels. One of the things that I think we've seen is that there are some fundamental formats in social media, like feeds and stories, and now I think this Reels short form video format, that within the context of a different network or community, the same format will take on different characteristics. So, for example, the kind of discussions that you might have in a feed on Twitter or on Pinterest are different from what you would do in Facebook or Instagram, even given a relatively similar format. So I think to some degree, even if a creator chooses to reshare their content across a number, you'll have different discussions with your friends across the different services based on who's there. And then there's the social dynamic where friends and different communities create these as well. So you see somewhat different Reels across Facebook and Instagram, and I'm sure you'd see different stuff across TikTok too. But what we're seeing is that this is all growing incredibly quickly. So it's hard to know exactly where this is going to settle in the end. But we just think the appetite that people have, there's been this long-term trend that I've commented on a number of times where, over the time that I've been running this company, 18 years this week, basically we've gone from, text being the primary way that people share and consume content online at the beginning of the early 2000s to, we got cameras on our phones and, photos became the primary thing. And now that, mobile networks are starting to have gotten really good, the video is really becoming the primary thing. And it is a lot more natural and engaging. This is partially, by the way, why I think that an even more immersive format around virtual reality and augmented reality is going to be the kind of next step after video and why we're so invested there. But definitely what we're seeing with short form video is it's the next step from the kind of visual feeds that we have, and the amount of engagement and content that people want to share and interact with, and whether it's taking it and sending it to a friend in messaging or commenting in line or just having fun watching it themselves. It's in general, we're seeing that people want to spend a lot more time in this than what we've seen from apps so far. And that's also reflected in the success that other apps like TikTok have had. So there's a lot more to go here. We think we will have competitors across the industry, but as we've seen with some of these other formats too, it'll feel different depending on the context in which it's implemented and the content from your friends.
Our next question is from Lloyd Walmsley with UBS.
I think we had a follow-up.
Yeah, this follow-up I wanted to answer the SMBs. So it's a good question because, as we've said, the iOS changes definitely hurt advertisers across the board, but they're much harder for SMBs. The progress we made on the measurement gap, which I talked about before, we've made more progress with larger clients than we have with SMBs. It's also the case that personalized ads are more important for SMBs. You know, an SMB really needs to buy a very small targeted audience that they're looking for. And the larger the business, the more you're able to personalize the ad less. So we're definitely seeing that this has more of an impact for SMBs. We do feel over the long run that we believe we have strong benefits for SMBs in using our ad system. We are going to continue to work on these measurement gaps and continue to make sure SMBs can use it. We're also working hard on SMBs adopting some of our commerce tools and some of our other solutions like business messaging and seeing some success there. But you are right that this remains a challenge.
And our next question is from Lloyd Walmsley with UBS. You may go ahead.
Thanks for taking the question. Maybe one for Mark and one for Cheryl. Mark, if we look at short form video, you know, how do you feel right now about the state of your content and your matching algorithm relative to where you want it to be? I mean, do you have the content you need? Are you getting it in front of the right users, or is there a lot of room to improve this and drive more engagement? And then Cheryl, where exactly are you in terms of rebuilding the ad product, and what are the key things you need to see to kind of roll out, or what do customers either need to adopt or do on their end to really start to see improvement to ROAS and a return of that budget? Like, are there certain features like CAPI that you need to get adopted? Are there tools in the pipeline? Are there things they need to do on their end? What do we need to see to see that come back?
I can take the Reels question. So we do see a huge amount of potential ahead, but you know, I think sometimes when we say that that there's, you know, that we're closer to the beginning, what that means is that we still have a lot of kind of fundamental questions to overcome in order to make progress to get where we're going. With this product, what we see is there is very clear product market fit, and it is growing incredibly quickly. We face a competitor in TikTok that is a lot bigger, so it will take a while to compound and catch up there. But fundamentally, you know, we think that there's just a lot of potential for it to continue growing. So to your question of do we have the content that we need, you know, it's a flywheel. So you know, the better tools that we can build for creators and the better monetization we can offer them, which tends to be an advantage that we have over other competitors, is how effective our monetization and ad systems are. Then, you know, I mean, the bigger it gets, the more it'll attract more creators, and it'll kind of build on itself. And we think that we're already at a scale where we're seeing that flywheel really kick in and start to grow. And if it keeps on compounding at the rates that it's growing at, this is going to grow extremely quickly over the next year, and potentially beyond that. But yeah, I think that's kind of the best summary that I can give of where we are. Clear product market fit, growing quickly, long way to go to catch up to be the biggest in the space. But I think the pieces are in place, and the focus is certainly there at this point to really go after that. It's just that as this grows, it is at least for the coming quarters, it's going to monetize at a somewhat lower rate, which is reflected in the guidance that Dave gave. But again, I think this is clearly the right strategy for us to push on. This is what people want. They enjoy the product. We're just gonna roll it out as quickly and as well as we can.
On the question of what we need to see to rebuild ad products and continue to grow return on ad spend, in the short run, as I talked about, we're working on measurement. We're rolling out new ways to help businesses continue to measure campaigns using Apple's SKAd network, API, and Meta's aggregated event measurement and conversion modeling. So we have specific products that people can adopt that help us. Over the longer term, we need to develop privacy-enhancing tech to help minimize the amount of personal information we learn and we use more aggregate, use more anonymized data, while still allowing us to show relevant ads. And that's going to take us time. But one thing I do want to point out is there are also a lot of things that small businesses and large businesses can do to take advantage of the many targeting and measurement tools we have. So while we have seen an impact from these changes, we also didn't start from a place where 100% of our, millions and millions of advertisers are using the tools that are available. So while we continue to get those that were all the way on the adoption curve to, learn and adapt to these changes, there are also advertisers out there that aren't doing even the basic things yet that we can continue to work on and improve their performance. We still believe there's a lot of performance improvement left in the system.
Great. Operator, we have time for one last question.
Very good. Our last question will be from the line of Ross Sandler with Barclays. Please go ahead.
Thanks for squeezing me in. I guess, Dave, a question on the family of apps segment margin. This hasn't come up yet, but it was down about 6 points year on year. And I know that you had kind of forecasted the expense growth that you came in at for 21, but I think that downtick is coming as a bit of a surprise for some folks who thought your ad business had fairly stable margins. So any more color on what's driving that? Is it just the revenue headwinds that you're experiencing or any other lumpy items? And then related to that, as you build out short form video, how does your thinking evolve around paying rev share like YouTube does or other things like that to catalyze the shift? Any thoughts on that?
Yeah, Rob. I think in terms of lumpy items, I mean, you will see that G&A was up, a pretty substantial amount in Q4. So a part of that is related to legal-related expenses that tend to be lumpy. So that there was a factor there. I think in general, as it relates to family of apps and margin, I'd come back to the commentary that I made on the investments that we're making and family of apps, being an area where we're investing heavily in 2022 across the priorities that Mark outlined, including Reels, messaging, commerce, and ads. There's a big investment that we're making on the CapEx side that's primarily geared towards, AI and machine learning for the family of apps business. So, segment. So there's a lot of investments that we're making there. What was it? Can you make sure I get the second question? In terms of, payments to partners, that clearly will play into the expense profile as we grow that, as we grow short form. So that's also reflected as part of the guidance for expenses. So, over time, that will be an impact as well, and that's part of the investments that we're making, on the Real side and is factored into the 2022 outlook.
Thank you. Thanks to everybody for joining us today. We appreciate your time, and we look forward to speaking with you again.
And this concludes today's conference call. Thank you for joining us. You may now disconnect your line.
OK， 他们讲完了，然后我大概说一下我的感想以及回答一下大家的问题。我们先讲 Facebook 的问题，然后其他的公司的我们放在后面啊。我的感想是说，他们现在的问题好像主要是从它新的short video 的形式来讲，它的 monetization 比现在的要差，这是可以理解的。所以它有一个像以前一样转型的问题，怎么把这些流量上去之后，把那个广告加进去，然后把收入再带起来。所以我觉得这个管理层很有信心。我觉得他们已经公司10几年已经转型过很多次了，从一开始 desktop 到 mobile test 到 image 到现在 video， 我觉得转型应该这个问题不大。然后第二个就是 TikTok 的竞争，这个我相信大家可能有感觉。我觉得 TikTok 很困难会成为一个全球1亿市值的那种特别大的公司，而且掌握很多美国以及其他国家公民的数据，所以这个竞争现在我觉得我的感觉是 neutral， 可能还要看，但我觉得 Facebook 应该还有很大机会。所以我总体上我觉得这家公司，如果你看它疫情之前价格好像是220，现在如果跌到250，其实这2年其实价格差不太多，所以其实我觉得从市盈率上，有人问，我觉得市盈率上如果跌到20以下，我觉得这应该是很便宜了，因为我觉得这个公司长期的增长，它的内在价值肯定还是在增加的，它未来还有很多领域，然后都应该有很大的发展。Metaverse 我们现在还没法考量，如果成功当然就更难说了。所以我觉得这个公司跟 Netflix 我觉得比 Netflix 还好 ，Netflix 我还有一些看不明白的，但 Facebook 我可以理解它所有短期的问题，然后也可以看到它长期基本面可能没有变，然后如果市盈率真的跌到20以下，甚至更低，我觉得是很好的价位了。所以有人还问说，哎，为什么 Google 比它增长这么快？这两家公司呢，第一个 Google 有 YouTube， right， 它有那个云端业务，所以它这个增长就是那个 driver 比较多。第二个呢，它没有 iOS 的影响，我之前视频讲过，因为它跟 Apple 是一伙的，然后两个人手机上都有很多那个消费者的信息，所以它比 Facebook 要更容易应对这种 iOS 的这种在手机上的广告政策的变化。所以这两家就是为什么现在增长就是有不同，我觉得这两个很不一样。还有就是当然它没有现在从 search 转型的问题，它几个业务都比较稳定。然后还有问说，哎 ，Facebook AI 是不是主要为广告？其实这种公司 Google 也好 Facebook 也罢，它的 AI 用在公司的所有业务当中，广告当然是重要的一个，怎么更 targeting， 更 targeted。还有另外一个就是说推荐，比如说你看到什么 video。TikTok 也是一样的，就最终你看到什么样的 video 都是它后面的 AI 在起作用，包括你的朋友的推荐啊，你先看哪些内容，后看哪些内容，这全都是后台的人工智能在起作用，所以它的应用是很广的。还有两个朋友问元宇宙 Metaverse 他今天讲的不多，我之前讲过一个视频，我总体是比较看好，但是他现在给的信息很少。我上次在视频里面提了，我要看的两个，一个是说他今年要推出的新的那个更贵的那个 device， 到底比现在的那个我现在有的 Quest 2 能增长多少，就是能有多好的、更好的、更高级的应用。第二个就是我要看说他有没有更大的举措，能够把自己的那种ecosystem build up， 比如说现在微软收购了暴风，然后索尼也收购了一家游戏的公司。他有没有在游戏的领域能有比较好的举措，能把自己的那个地位巩固一下？所以我觉得元宇宙现在讲还很困难，但是最近2年主要还是投资，但是我会看他的那个 device 以及他那个主要他的 partnership 最近几个月有没有什么变化？还有就是我想OK， 有人问到期权的问题期权这个挺有意思，说上市公司会不会发布一个很低的下个季度的预期，把拉低自己的股价，然后给大家多发期权，下个季度又把它拉高，让股价升回来。理论上是可以 ，OK， 理论上可以。比如说你一般的公司当中给你发期权，一年可能2次，它期权就会按照，比如说我要给你，比如说100万的奖励，但是你当时给你奖励的时候股价多少，对你给你多少股票当然会有影响。他会用那个蒙特卡罗的模型去 model， 说，哎，这个公司的股票给你之后4年到期值多少钱，然后当时的股价肯定会对 model 有比较大的影响，所以理论上是可以的，但是呢，很少有公司真会这么做，然后因为这个其实意义不大，而且像 Netflix 更特别说这家公司更困难，因为我之前视频讲过，他的公司是说你要所有的管理层和员工要在每年去选，说我工资当中多少要换成期权，然后每个月他会把你的工资自动的按照那个当个月的实时交易的那个价格打折之后给你转成期权给你，所以你如果是只是短期拉低股价，其实很难影响你最后期权的价格。我相信 Netflix 肯定不会做这样的事情，所以这个我觉得不是要担心的。那我们再来谈，剩下2个都是关于Upstart，Upstart 就说 ，OK， 我们是从天黑讲到天亮了，这是新加坡的背景，这是我的 condo， 后面是我的小孩去上学，就是最后 Upstart 的估值怎么样？我觉得最后取决于是说市场上会有多少人最终认同我的判断，说这家公司跟什么 SoFi、Lending Club 不是一类人 ，OK， 不是一类的公司，不能放在一起看，它是应该跟 Square、Affirm 这些公司真正的好公司好增长，然后再来估值。你即便把它的增长看得很低，以它现在的市盈率或者别的已经很便宜了。如果真的像我，如果我的判断是对的，如果它1周以后、2周以后最后发的财报 而且尤其对明年的对今年的预期非常好的话，我相信市场很快这个就会逆转过来，就会对比，比如说 Lending Club，未来1年的预期增长怎么样 ，SoFi 怎么样 ，Affirm 怎么样 ，Square 多少，然后Upstart 再怎么样，这些就像这个赛马一样，然后一开始起步时候大家好像都很快，但一到了1/4的赛程之后，很快就很明显，就是说谁增长更快，谁增长更慢。所以我觉得其实第一个，你的均价如果220、230，我不觉得高啊。我原来的均价比这个要高，但是现在因为我又买了很多，所以我现在的均价比这个要低。我现在均价应该不到200，我还会继续买。所以现在的价格，我如果觉得它公司没有问题，我有钱还要继续买。所以我的价格希望了啊，它能给我机会，可以把它价格再拉到甚至更低。但我觉得，即便你的均价在200以上，我觉得也不可能需要好几年才能市场回到原先的这个价位，不会的，因为这种公司如果我判断是对的，它每个季报都会让人感觉到它跟别的公司的不同，再加上如果当时到那个时候来，整个市场比较回暖之后，对科技股没有现在像这么仇恨的态度，具体价位很难讲，但我感觉它的价位恢复正常，应该不是那么特别有难度的事情。还有一个人问到，就是那个 Pagaya 这个公司，我之前看过，我视频好像印象里提过一次，很粗略的。问题是说，不是我不想调查，而是他没有什么资料，他没有 S1， 他没有真正的上市公司的那个几百页长的那些资料可以看。他现在就有个 deck， 而且里面的东西啊，就是全是 spec 那种，就是很空话大话的，就它里面有一张 slide， 把自己跟 Upstart 还有 Lending Club 还有别的公司几家公司对比，我也看了，然后差点笑出来。因为第一个他用 Upstart 的数据时候，Upstart 在疫情期间曾经有一段时间增长很低，所以他就把那很低的增长跟自己来对比。疫情之后 Upstart 一下增长几百倍，100%几百 ，sorry， 然后他那个反而就不受了，说这种增长太快了，这个不适合对比，所以他把这个就给 hide 起来，知道吗？所以就说这是明显的属于作弊的情况，就是说因为这两个其实是硬币的两面，知道吗？就是说那个1年前增长很低，所以1年后增长才这么高，你要么两个都不要受，要么两个都受，所以他就故意把自己的那个增长好像看起来比 Upstart 要好。所以我觉得这种公司给我的感觉，背上现在的很有限的信息，我的感觉是说好像不是特别的规范和正规所以我现在没有很多别的资料可以谈我在 Twitter 上没有看到更多详细的资料，有的话我会去讲，没有的话我现在只能说基于这些有限信息，我是对它的 AI 以及它的成就未来能有多远现在有点怀疑。对，它是 SPAC 上市，对这个所以这种 SPAC 的公司，我之前视频讲过了，我对这种通的 SPAC， 除了 OpenDoor 之外，我对其他的 SPAC 公司确实很难提取兴趣。这个他们加息的极限能加到多少？加息的极限 who knows， 它1年哪怕加7次，也才加上比如说 1.75， 对吧？其实就是大家，我视频里面讲过，大家看的是加息好像是一个动作一个动作，其实你看我们现在整体，现在明年甚至后年，整体在历史上看仍然是一个很低利率的时期，对公司的增长、对经济恢复总体是有好处的。就是说，如果跟前面几十年相比的话，所以加息我觉得对科技股估值当然是一个坏事，但是对真正的好公司增长长期没有太大的影响。然后CEO 的买回了股票，这是真的吗？如何查证？这个我还真不知道。Upstart CEO 买回了自己公司的股票，我会去查一下。Also the repeating OK， 我其实不奇怪就是因为 Upstart CEO 这样，比如说那个你看，其实最聪明的 Netflix 的 CEO Ray Hastings， 他也是因为最近他的股价涨了很多，一个是说 Bill Ackman 买了他的公司的股票，第二个就是市场看到他自己也买了自己公司的股票，因为他现在工资90%已经都是公司股票期权的情况下，他又自己拿那点工资又买了很多股票，所以这个问题 就是表明就是 CEO 对公司的信心了。就是如果 Upstart CEO 也好 CFO 也好，然后买回自己公司股票，我是完全不 surprise。当然 CFO 很困难，因为我知道Sanjay，因为他其实没有卖一股股票，所以他现在也都是靠自己的公司在生活，工资在生活，所以我相信他其实没有多少余钱可以拿过来再回购自己的公司的股票。我其实是希望 Upstart 在今年在这次财报发布的时候，能对自己的股价稍微做点评价，看有没有，我不知道他能不能比如说宣布一下 buyback 什么的，但是就是说管理层应该不会放任自己的公司在很低的价位持续很长时间，因为这样对自己那些，因为这种高增长公司对自己的员工的就会有很大的坏处，因为很多员工一下手上的股权变得不值钱了，知道吗？就别的竞争对手 offer 就一下变得非常 attractive， 所以这些公司一定会想办法，就是如果认为自己公司价位确实低的话，他们还有很多手段可以做，所以我也不排除他们会有更激进的手段了。我觉得其实只要公司其实像 Netflix 一样，你只要有正的现金流，然后未来增长很好，干嘛不回购自己的股票呢？其实我觉得 Upstart 如果今年做这种事情，我也不会surprise。OK， 我觉得我不知道我讲清楚了没有，可能讲的有点快，因为因为时间已经1个小时20分钟了。上世纪那个水平我觉得利率加到3%，应该还需要一段时间，因为现在其实经济有很多不平衡的地方，然后你看现在的那个美联储主席他其实我觉得比格林斯潘好多了，然后很清楚说他每个季度每个月他跟他的 team 有会议，他们会看很多不同的指标，因为他一手要保就业，一手其实要保增长，就不要有通胀，所以他要中间要平衡，如果这中间如果有一头明显有问题，他会及时调整的。OK， 好像东方不败兄终于要上线了，然后我不知道大家讲清楚了没有。我 Upstart 现在的仓位是我都没有去看，因为最近跌了很多。如果看我买的那个时候那个仓位，可能现在超过了70%都有可能。当然，如果看跌了以后，它现在仓位反而变小了，因为现在西方石油公司那个股价又涨了很多，然后所以相比之下 ，OpenDoor 和 Upstart 那个比重又变小了，所以我等4月份会给大家公布我的仓位以及会详细再说了。我觉得这个短期其实这些无所谓的，就是我的时间还是花在调查上，跟大家 share 说我学到了什么东西，对这家公司，我现在是说看法是变好了还是变差了，对吧？我的看法有可能会变，因为我不是那种死粉的，就是说，我就爱这个公司，一定爱到底，然后什么也不变的。This is not a marriage。券商哪个 Interactive 就是 IB， 因为它不太好用，但是比较便宜 ，so far 还没有什么问题。我不知道这位同学讲的说 ，Twitter 上对于 Upstart 的分析是哪里？因为好像看不到链接，我不知道你说的是不是那位之前有人在留言里提过的，忘了他的名字了。我也有看很长的他那个分析，多数我是同意的，但是他其实比如他也没有更多的关于比如帕嘎亚的信息，我觉得我的 Open 现在好像是应该10%左右 ，again 因为他最近也下了一些，所以10%左右。我觉得暴雷，我觉得第一个，我觉得因为管理层很靠谱，他如果说他的公司预期是这样，我相信除非有特别特殊的情况，要不然肯定可以达到。会不会暴雷，关键看说对下个季度以及整年的预期。我感觉现在大家其实期望很低，我觉得这个概率其实不大。again OpenDoor 的利息支出加到3以上，它可能会增加 1%，对吧？因为它每年要转4次嘛的那个周转，所以就是那个 gross margin 从比如可能8%变成7%，或者9%变成8%，it's not a deal breaker， 就是肯定会有影响了，但不是一个特别大的问题。对，因为我还有西方石油的股票，而且现在西方石油因为涨得比较高，所以现在显得比重是3个，OpenDAO 最小 ，Upstart 最大，但西方石油在中间，现在价位也还在涨，所以我卖了一半，另外一半我现在除非就是股价，除非那个纳指确实跌到13000以下完，把大家股价都拉得很便宜，那个时候我才去卖剩下的一半。把它都换成我比较喜欢的科技股，至少现在看起来，我觉得，因为西方石油它的认股权，我觉得在未来2-3年再翻1倍，然后从现在好像是20不到，然后涨到40块，我觉得是很有可能的，就意味着它公司的股票可能要到60块左右。我觉得 Upstart 应该真的，我觉得应该没有问题，因为基本面确实没问题，然后公司。所谓的增长，它现在只有一个产品，而且一个产品它才刚刚开始，公司已经宣布那么多新的产品，而且就它的产品，我们讲了40多个视频，它的产品跟别的产品之间不是一个好一点的问题，而是一个完全是三体怎么讲说，就是跨界的那种差距，对吧？就是不是一个层面的竞争。OK， 我不知道大家 OK 了吗？然后快1个半小时了，如果 OK， 我们就这样。我们下周好像是要做 affirm， 好像是11号，来，11号应该是 affirm， 就是下周五，周五是我这里的周五早上6点，我们会做 affirm， 然后再转过来一周是16号会做 upstart，OK？ 我不知道大家听清楚了没有？如果觉得大家对这个有什么回馈？请告诉我说讲得太快了、太慢了，没有讲清楚，声音有问题，背景太吵，这个背景不够漂亮，因为我没有自己的房间，因为我平时做这些都是在客厅，所以我现在只能因为小何正还上学这个时间，所以只好把自己的办公室搬在了露台，一会儿还要再搬回去，所以希望这个至少大家都能听得清楚 ，OK， 好不好？那我就。谢谢大家的支持，OK， 那我们就一会儿再见了，因为我再去睡会儿觉，然后一会儿再给大家讲一下我为什么不喜欢 C Limited， 我为什么不愿意买 Shopify，OK， 好了，下线了 ，OK， 谢谢大家。OK， 我觉得 OpenDAO 没问题的 ，OpenDAO 我看到有一些比较靠谱的预期，我觉得。因为 OpenDAO 的公司是这样的，它公司的很多买卖都可以网上可以查得到，很多机构都有把那个 projection 拿出来说，比如他可能这一个季度，比如上个季度就是他马上发布的财报，他可能要至少卖9000套，收入应该很好 ，margin 也不错，现在加上 Zero 又退出了，所以他其实后面几年他的 margin 的压力反而更小了，因为市场上没有 Zero 这么一个很大的一个。巨型的一个东西跟它捣乱，然后把它的 margin 可能会搞得更差一些，所以应该是没问题的。OK， 好吧，谢谢大家，那我们就下线了。OK， 拜拜。